Meanwhile, Berkshire Hathaway is withdrawing from India's insurance market. It's the latest high-profile exit by an international company from India. These departures are raising concerns among U.S. investors about India's viability as an investment hub. Li Tan has the story.
India, with its 1.2 billion people, has for decades been a big draw for foreign direct investment. But lately, a political malaise has gripped the country, and an exodus of major international companies has made headlines in America, calling into question India's long-term investment viability. In mid-July, South Korean steelmaker POSCO pulled out of a deal to build a $5.3 billion plant in India. And just a day later, European steelmaking giant ArcelorMittal announced it was abandoning plans for a similar facility. Now, these two projects would have been among the biggest foreign direct investment deals in the country. But the exits didn't stop there. Just a few days later, American billionaire Warren Buffett's Berkshire Hathaway pulled out of India's insurance market too.
I think most Americans expected India to be an exact replica of China, and they expected their growth to remain 8, 9, or accelerate up to 8 or 9%, and it really hasn't done that. But on the other hand, it hasn't been bad. I mean, Indian growth is about 6%, and it's going to stay there, and it may even go a little bit higher.
Still, India's growth is at its weakest in 10 years, weighed down by political turmoil, current account deficits, a weakening rupee, and high inflation. But is this really the time to write India off?
I wouldn't say they're being driven out of India. They're pausing a little bit at the present moment, and that's because of a number of political factors for the most part, and some economic factors. There's a huge consumption demand because we have a rapidly growing middle class, which wants the same sorts of things that middle class people everywhere in the world want. And so there is an attractive market opportunity.
And while POSCO and ArcelorMittal's exits strike a blow to India when New Delhi is trying to attract foreign capital, Subramaniam says Berkshire Hathaway's departure is considerably less consequential.
Frankly, in relation to Berkshire Hathaway's, humongous resources, this was a very small play. In fact, frankly, I was surprised that they even made that investment.
Both economists say India needs better leadership to fix its growing economic problems and argue that despite these discouraging corporate exits, over the long term, India cannot be ignored. Li Tan, CCTV, New York.
And as we mentioned, the Oracle of Omaha did it again. Warren Buffett's Berkshire Hathaway posted a 46% jump in profit. And joining me with more on this is Paul Lountzis, president of Lountzis Asset Management. Paul, thanks so much for joining us. What do you make of these results?
They're terrific across the board. Operating earnings were $3.9 billion, a significant increase, and $2,384 per Class A share. The Burlington Northern Railroad profit was up 10%. The utilities and energy businesses were up 10% in profit, and pre-tax underwriting at their insurance operations, GEICO, were also up.
I want to focus a little bit about his bets on the stock market. They did spectacularly well. So which stocks has Buffett been picking? What's been the best bet this quarter?
He's owned Wells Fargo for a long time, and Wells Fargo continues to rise. Coca-Cola and IBM have hung in there, but Wells Fargo has really done well, and my guess is he probably bought even more of Wells.
Now, they say that as Berkshire Hathaway goes, so does the American economy. So with this increase in operating earnings, as we mentioned, GEICO, railway operators, what does this tell us? Does this indicate to a recovery in the U.S. economy overall?
It does. Berkshire owns 80 plus different businesses, and it's really a microcosm in some ways of our entire economy, and each of those areas have really improved, and that's a reflection on the overall economy.
Now, with regards to his purchase along with 3G of Heinz Ketchup, that deal only closed in June, so certainly not reflected in this quarter's earnings. But what can we detract from that deal?
A couple things. One, that Berkshire increasingly is going to look for companies that can go global. A lot of Heinz's revenues and earnings are in emerging markets around the world. And secondly, it put to use over $12 billion, $4 billion in equity, and then he got an $8 billion deal where he's earning 9% on that other $8 billion. So it's a great deal for him.
Do you see any more acquisitions in the future?
Yes. The future of Berkshire, in my mind, is really buying companies domestically and around the world, particularly family-owned enterprises.
What sectors do you think?
He'll businesses that have competitive advantage, his historical, he lists the criteria in his annual report of what he's looking for. And I think if he understands them and they're high quality management teams available at attractive prices no matter where they are, if they're interested in selling, Berkshire is a willing and able buyer.
Now, as we saw before we came to you, one of Berkshire's companies pulled out of India, one of the insurance companies. Why?
You know, that's interesting. Charlie Munger has stated at several of the Berkshire annual meetings, India is a very, very difficult place to operate, regulatorily, highly fragmented. And my guess is they just didn't get the success perhaps that they had wanted there and weren't getting the returns they wanted, so they decided to pull out.
Now, what about Berkshire's presence in China? That's been relatively limited, actually.
It has been, and frankly, a lot of his investments around the world, most are still in this country. But I think China, long-term, represents an interesting opportunity for Berkshire.
Do you anticipate the company purchasing some assets there? Any acquisitions on the China mainland front?
It certainly could be an opportunity. There's plenty of privately held companies run by families over there, which are his preference, that may seek, you know, a nice home in Berkshire.
Okay, I'm going to have to leave it there. Class A shares at $176,500. Wow, you have to have a lot of bucks to buy into Berkshire Hathaway. Thank you so much, Paul Lountzis.
Thank you for having me.